My view of Bitcoin is it is the highest quality property or the highest quality asset you can own in the world right now. It's superior to bonds, superior to commercial real estate, superior to equity, superior to gold, to silver, to commodities and derivatives. And that's an easy observation in a world of extreme monetary inflation. Bitcoin is the emerging dominant digital monetary network. If you're looking for a treasury reserve asset and you're looking for a generational store of value in lieu of gold or in lieu of any other scarce tangible property, then Bitcoin is compelling, and it's compelling because it's simple. Ethereum is a speculative asset, and it's a very ambitious technology project. It comes with a lot more complications, a lot more risk. If you have a technology portfolio and you wish to invest in a technology that has risk and complexity because you're interested in decentralized finance and all of the applications in the Ethereum blockchain, then that's an interesting thing to consider. But if you're looking for a treasury reserve asset or a long-term durable store of value, I think Bitcoin is obviously the right choice. In my opinion, the entire world has a multi-hundred trillion dollar store of value problem, which will be solved by the dominant digital monetary network. Since Bitcoin is only 650 billion in market cap, and since there's a $200 trillion addressable market, the most obvious thing in the world is buy into the dominant digital monetary network and wait for the rest of the world to start to realize this is the solution to their problem. There's no better risk-adjusted investment idea I can see in this world right now than to buy something everybody needs that's got 95% network dominance, that is engineered specifically for that purpose, that dozens of billion-dollar entities are embracing for that purpose right now. I just can't see why anybody would buy gold. I think gold's going to be demonetized. As the generation that bought gold learns about Bitcoin, and as generational wealth moves to the technologist, I think the Bitcoin is the digital gold. Look, I've got a phrase, diversification is selling the winners to buy the losers. So what portion of your tech portfolio would you invest in Amazon versus the retailers that aren't Amazon, right? It seems like you would have lost on 15,000 retailers, made money on Amazon, and maybe broke even or made a little bit on Walmart. And what portion of your portfolio would you invest in non-Apple stock in the mobile space? And what would you invest in the other search engines instead of Google? And what would you invest in the other social networks instead of Facebook? The diversification away from the winner is diversification to the loser. So take half your portfolio, invest it in gold and get 15%, and the other half invest in Bitcoin and get 300%, and then do that 10 years running, and you'll pretty much destroy half your money. Like, you'll lose half your wealth. I'm a rational actor, and so I consider what's going on in the world at all times. My view of Bitcoin is it is the highest quality property or the highest quality asset you can own in the world right now. It's superior to bonds, superior to commercial real estate, superior to equity, superior to gold, to silver, to commodities and derivatives. And that's an easy observation in a world of extreme monetary inflation, with inflation rates of 15% or more expected for the next 5 years. It's easy. If the monetary inflation rate was zero, it would be difficult, and I would have to evaluate the differential coupons, rents, and dividend yields of all those other assets because they're fiat derivatives. And if no one could mine any more gold ever again, and if it wasn't centralized, I would have to consider that. If something changes, and if some other superior technology comes along, we'll figure it out. But right now, I don't see anything superior. So my view is that every time you sell Bitcoin, you're buying an inferior asset. And so you're selling a winner to buy a loser. And given the likely differential rate of price appreciation over the next decade, it would be seriously wealth destroying to diversify out of it. Well, my answer is none of them have ever considered Bitcoin as engineered money on an engineered monetary network. Electricity wasn't a bubble. Automobiles weren't a bubble. Aqueducts weren't a bubble. Airplanes and airlines aren't a bubble. We spent massive amounts of money on communication system, in order to deploy the telephone, the telegraph, the mobile phone, television. None of these are a bubble, right? And in this particular case, Bitcoin is a monetary network. They simply don't understand that it's a monetary network. Once they understand, and maybe they'll never understand it. There are plenty of people that thought, made fun of Henry Ford. What is this with standardized automobiles? John D. Rockefeller had Standard Oil. He standardized oil. Was that a bubble? General Electric, general electricity to your home to power up your appliances. Is that a bubble? Right? General Motors. That's everybody is a standard motor. We're replacing the horse and buggy. Is it a bubble? And the answer is no, it's not a bubble. It's an engineering breakthrough. And eventually everybody in every company on earth is going to be wired into a monetary network because it's thermodynamically sound and it solves a problem that everybody has. Once they realize it solves the problem, and maybe they won't ever. There are people that don't have electricity in their houses. They thought, there are demons that were going to invade their kitchen with the thing. And I suppose you find people that get shocked by electricity and they're still afraid of it and they never gave up their horses. But no, it's not a bubble, it's technology. How long did people object to noisy automobiles, and how long were they afraid of electricity, and how long were they afraid of elevators and tall buildings? I mean, there are people that didn't want to get in elevators for a while. I suppose probably it's a decade. Like it takes a decade for people to adjust to these things. And, you can't really go much faster than we're going. Bitcoin is appreciating at 200% a year for 12 years. It's appreciating at 300% this year. I kind of find it hard to, how many big tech networks grew at 100% per year for a decade running? Like, this is a big tech monetary network that is expanding in excess of 200% a year. So you can't really ask it to expand any faster. I think that for the next decade, we're just going to see the expansion of a digital monetary network that is Bitcoin, and people are going to probably resist it and fear it more as it grows, because when no one notices it and cares about it, they don't have an opinion. But when people come into your neighborhood and they start wiring their house for electricity, you start complaining about all the ditches they're digging and all the obstructions in the road and all the power lines. And then you're worried about the power lines giving you cancer. And then you hear about someone getting electrocuted, and then someone drives a noisy automobile down the street and the kids are playing in the street and you worry about it. There's going to be a lot of pushback, I suppose, and it'll be natural. But it's not going to change the inevitable, which is the world needs a digital monetary network. It's a $400 trillion problem. It's an idea whose time has come. You're not going to be able to stop it. I've been talking to a lot of people for the past, 6 months or so. And I think that ever since we announced publicly that we were embracing Bitcoin back in August, and when we came out of our quiet period in September, I've had a lot of conversations with CEOs, a lot of conversations with institutional investors. As I've said before, Daniela, everybody has this problem. The more money you have, the bigger problem you have, and everybody needs a solution. The best solution is the big tech dominant digital network solution. That's how people solve their problems with Google, with Apple, with Facebook, with Amazon, with Microsoft. They're going to solve their monetary problem with the dominant monetary network. And I think in 2021, you're going to see a lot of corporations embrace Bitcoin. We're hosting a Bitcoin for Corporations Summit coming up February 3rd and 4th. Lots and lots of companies are coming. They're all trying to figure out, how do I plug in my P&L? How do I plug in my products? How do I plug in my balance sheet? You're either going to do it because it's the solution to your problem, or you're going to do it because it's a big tech network growing north of 200% a year. Why wouldn't you? Yeah, people ask me about that. And the point that I make is Bitcoin is not a stock, but it's not even an asset. I mean, if it was a stock and it went up by a factor of 10, then you're valuing it versus the underlying cash flows, and you're thinking that the P to E ratio is blowing out, is becoming very risky. But it's not a stock. A stock is a reflection of the outlook of the cash flows of another unrelated product in a fiat currency system. Bitcoin is pure monetary energy. As the price goes up, the monetary force related to Bitcoin goes up. The attraction that that monetary force has, like a gravitational force, to money goes up. So if you want to understand where Bitcoin is going, you look at the entire worldwide monetary system, and it looks like there's 200 to 300 trillion dollars worth of money that's looking for a store of value. In a monetary expansion environment where I crank the monetary inflation rate up by 15%, that $300 trillion has got to find a store of value that's not a fiat derivative. That means that Bitcoin is going to keep growing, and its monetary force is going to keep growing, and it's probably going to grow 200% a year until it has demonetized gold, silver, sovereign debt, bond indexes, stock indexes. Every source of monetary energy, which is just a store of value for someone that doesn't want to lose their purchasing power and they need a scarce asset. That being the case, I don't really see an end to up. I think it's going to keep going up for the next decade, at a rate that's pretty commensurate to what it's been doing for the past decade.